Want to know the 5 best stocks to buy for 2025 and why they could make you serious money? From tech giants dominating AI to turnaround stories with massive potential, I've got the top picks you need to watch. So here's the deal. The markets are evolving fast. From AI breakthroughs to booming industries like cloud computing and cybersecurity, these stocks are positioned to make the biggest moves in 2025. I'm also throwing 2 honorable mentions, including a company that's redefining how we travel. Meta. You probably know it as the company behind Facebook, Instagram, and WhatsApp. Here's why Meta is one of the best picks for 2025. First reason is their ad business, which is booming. Despite competition, Meta's ad revenue is growing rapidly, with 21% revenue growth expected for 2024 and another 15% for 2025. Instagram Reels and AI-powered ad targeting are stealing market share back from rivals like TikTok. Number 2 is the AI advantage Llama, Meta's AI model. Llama is leading the open source AI race. What makes this special? Open source AI can collect vast amounts of information faster than closed systems. If Meta monetizes Llama with a paid version, it could open up a whole new revenue stream. Number 3 is profitability and scale. Meta is already incredibly profitable, generating billions in cash flow to fund future innovations while buying back its own stock. So why am I telling you this? Meta isn't just about social media anymore. Its dominance in advertising, early lead in AI, and strong cash flow give it a foundation to thrive in 2025 and beyond. Next up is Alphabet, the parent company of Google and YouTube. This stock combines rock-solid stability with huge growth opportunities. Their first strength is their advertising dominance. Google's search and YouTube platforms are still unmatched for advertisers, delivering consistent revenue growth. The second reason is Google Cloud's rapid growth. Google Cloud grew 35% year over year in Q3 and is becoming a significant profit driver. The cloud market is expected to quadruple by 2030 and Google is gaining market share. Their other bets division includes projects like Willow, their quantum AI computing chip, or Waymo, their self-driving car company. While it's not generating revenue yet, this could be a massive opportunity down the road. Alphabet recently also started paying a dividend for the first time, with the stock trading at just 25 times forward earnings. It's attractively priced compared to peers. Alphabet isn't just a search engine. With cloud, AI, and long-term innovation, it's a balanced mix of profitability today and growth tomorrow. Coming in at number 3 is Amazon, a company that's dominating in e-commerce and cloud computing. Amazon controls 40% of US e-commerce, but here's the kicker: e-commerce only makes up 16% of total US retail sales. There's plenty of room for growth. Another strength for Amazon is their web services. AWS accounts for just 17% of Amazon's revenue, but contributes 60% of its operating profits. The expectation is that cloud computing is a massive $2.3 trillion market by 2032, and AWS is the leader. Beyond that, Amazon is pushing into healthcare, grocery stores, and even AI with its investments in startups like Anthropic. So, what does this mean? Amazon's retail business provides stability, while AWS drives profitability and growth. It's a two-pronged strategy that makes Amazon a standout stock for 2025. Fourth on the list is CrowdStrike, a leader in cloud-based cybersecurity. And there's a couple reasons why this stock could soar. Number 1 is cybersecurity demand is exploding. With cyber attacks on the rise, CrowdStrike's AI-powered Falcon platform is leading the charge in protecting cloud data. Number 2 is crowdsourced advantage. CrowdStrike collects security data from its massive user base, analyzes it, and uses that data to improve security for all customers. The more users it has, the smarter and more effective the platform becomes, creating a major competitive edge. Number 3 is huge market opportunity. CrowdStrike's annual recurring revenue is already $3.86 billion, but the company sees a $225 billion market opportunity by 2028. So why this matters? Cybersecurity isn't going anywhere, and CrowdStrike's AI-driven platform makes it the go-to name for protecting data in the cloud. Now, let's talk about PayPal, a cash machine that's trading at a big discount. PayPal's growth slowed in 2022, but it's still a highly profitable business. With a completely new management team in place, PayPal is making big moves, like launching an industry-leading cashback debit card and rolling out an advertising platform. They also have massive scale. PayPal processes over $1.6 trillion in payments annually, with 429 million active users across PayPal and Venmo. PayPal also generates about $5 billion in free cash flow every year, and is using that cash aggressively, buy back shares. A sign the management believes the stock is undervalued. PayPal trades at just 18 times forward earnings, far below the S&P 500 average. So why this matters? PayPal's combination of scale, profitability, and undervaluation makes it a strong turnaround play for 2025. Before we wrap up, here are the two honorable mentions: Nvidia and Airbnb. Nvidia is a company that has absolutely dominated the AI hardware space over the past 2 years. But here's the thing, even after such massive growth, there's still plenty of upside. Nvidia's GPUs are the gold standard for artificial intelligence and machine learning. These chips power everything from OpenAI's ChatGPT to cloud providers like Amazon AWS, Google Cloud, and Microsoft Azure. As AI adoption accelerates, demand for Nvidia's products will remain sky high. Also, Nvidia's next big innovation, the Blackwell architecture, is set to roll out in 2025. Blackwell promises huge performance gains over its already market-leading Hopper chips, which means customers will upgrade their hardware for better speeds and efficiency. Nvidia's growth is still extraordinary, even after its impressive run. Wall Street expects 51% revenue growth next year as demand for AI continues to soar. Combine that with Nvidia's sky-high margins and strong free cash flow, and you've got a company that's leading the most important tech revolution of our time. Nvidia is no longer just a gaming chip company. It's the backbone of the AI industry. If you want exposure to the booming AI revolution, Nvidia is still a must-watch stock in 2025. For our second and last honorable mention, we have Airbnb, a company that's transformed the travel and hospitality industry. Here's why Airbnb deserves a spot on your 2025 radar. In the most recent quarter, Airbnb's platform saw 125 million bookings, representing 12% year-over-year growth, with more than 8 million properties listed by over 5 million hosts worldwide. Airbnb is scaling at an incredible pace. Unlike many growth companies, Airbnb is already highly profitable. It generated $4.3 billion in free cash flow over the past year, with an industry-leading 41% free cash flow margin. This shows how efficiently Airbnb converts revenue into real profit. Airbnb's market opportunity goes far beyond short-term vacation rentals. They're expanding into long-term stays and unique travel experiences, which could add billions of dollars in potential revenue. Airbnb is sitting on more than $11 billion in cash, giving it the flexibility to reinvest in growth and reward shareholders. In fact, Airbnb has been aggressively buying back its own stock, signaling confidence in its long-term valuation. So to sum up this stock, Airbnb isn't just a travel company. It's redefining how people think about accommodations, from short-term getaways to long-term living. With strong financials, growth potential, and market leadership, Airbnb could be one of the best growth stocks to own heading into 2025. So there you have it, 5 of the best stocks to buy for 2025, plus 2 amazing bonus picks. Whether you're looking for strong growth with Meta and CrowdStrike or undervalued potential with PayPal, these stocks have the fundamentals and innovation to thrive. I highly recommend diving deeper into these stocks to get an even better understanding. To help you get started, I have a full analysis of Alphabet right here, so don't miss out. And as always, happy investing.